Good morning, traders. Today is Thursday, July 20th. Michael Boutros here. Welcome to this live intraday strategy webinar. Today is ECB day. Good to be with you this morning, D, Mark, Nilesh, Pooja, Ziad. Good morning to everyone in the room. So it is 5 years to the day of Mr. Mario Draghi's famous "we'll do whatever it takes" quote unquote speech to save the euro. And certainly the major focus for today's interest rate decision, guys, is basically on the asset purchases. They left asset purchases obviously unchanged at 60 billion per month as expected, but that is expected to taper back by December. We're going to see if there's any shift to that. There's some expectations that they might kick it out a little further to make it a little bit more gradual. We'll have to see, devils in the details. Obviously, that's up and coming. So we'll try to give you headlines throughout the course of the webinar. I'm kind of staring at a lot of screens here, so I'll try to keep you up to date as sort of the major headlines hit. As it stands for the euro dollar, here's what we look like. So for today's list, let me just go over the menu here. So euro dollar, DXY, we'll cover both of those early in the session, as well as the euro yen and euro Aussie setups from last night. British pound also coming into some near-term support. 29.20 is a level I'm looking at. And Kiwi yen, dollar yen. Both of those look very interesting. Dollar yen with the rebound. Kiwi yen in the event of yen strength, is one I'm looking at. We'll take a quick look back at Aussie Key and gold prices and Aussie yen, which continues to hold near-term resistance as well. Okay, and as always, guys, throughout the course of the session, if you have any questions or specific trade setups you want to review, feel free to drop them on the message board at any point. Okay, so for our euro positioning, here's where we stand to start off the session as we get into the Mario Draghi press conference. Here's the daily chart. So the only thing I wanted to highlight on this yesterday is this. Look, this 2015 trendline resistance, we talked about this extending off of that late August high and the highs from last year. We turned just ahead of it last month. Again, if this break is legit, a break of resistance, test to support should keep us well above the monthly open, which is down at 114.18. So that's sort of the initial support structure I'm looking for. On a dump, let's say Mario Draghi comes out with some radical commentary and this thing really accelerates to the downside. Here's your bullish invalidation. So 112.85 into 113.12. That's basically the monthly objective monthly opening range low. So again, irrespective of what anyone says, objectively it's the monthly range low. It's also the key 1618 extension from the advance and those former highs that we made in the June opening range. Both of these levels converge on the 50 line of the ascending formation, and that held support all throughout June. So a really nice spot here to sort of change the broader opinion if euro were to break down. Not our favorite scenario, but an area of which you'd look for some major support. Add to that, guys, beyond the three technical factors we just noted, the lows, the 1618, and the 50 line, take a broader zoom out for euro. And you might have seen this pitchfork on the longer term charts that Jamie's has on the long term page, right? Really nice pitchfork off the lows. This is from 2015, 2016, this year. The 50 line was a really nice launching point for the advance. And again, that median line for that structure converges on that same region. So you really know what to, we really are well aware of what level would change things for the broader view here in the euro. Northbound of 112.85, you got to stay constructive. This is still resistance. We didn't really cap it yet. The 2016 stretch highs at 116.16 converges very nicely on the upper 50 line, or the 75% line here. And that's just ahead of 116 or at 116. So that's the level that you'd need to clear to really fuel the next leg higher in euro. So the daily chart is pretty clear. Near-term support 114.39, near-term resistance 116.16, bullish invalidation. Okay, let's see what Draghi has for us. QE will run until ECB sees sustainable inflation pickup. Draghi saying QE will run at 60 billion per month pace through at least December. sees rates at present level well past the end of quantitative easing. ECB measures preserve favorable conditions needed. So pretty much status quo so far. You're seeing a little bump higher here in the euro. Again, from a trading standpoint, here's what the 240-minute chart looks like. So from a trading standpoint, the way I would be looking to play this is if we do get a stretch higher, this actually might be a decent area to see some terminal exhaustion. And I'd actually be looking possibly to get some playback there if we get some divergence, some near-term triggers in U.S. trade. Other than that, I'm actually looking to fade weakness. So if we get a drop into this support zone, we'll be looking for long triggers, more specifically basic trendline support off the lows for May, 3-point touch. Possibly could see this thing get as low as 1366. So we'll see what the commentary has. Economic condition expansion has yet to feed through to price. Says recovery has broadened, headline inflation dampened by weakening energy prices. Underlying inflation pressures remain subdued. Very substantial degree of accommodation is needed. A little bit more of a dovish stance, but saying that still underlying inflation pressures remain subdued. Unlike the Fed, guys, the ECB does not have a dual mandate. The Fed's dual mandate of price stability and fostering maximum employment. ECB's mandate is simply inflation, price stability. That's it. And it looks like markets are running with the headline that says, Draghi says, very substantial degree of accommodation is needed. Again, should charge some weakness near term here in euro. Any questions on the euro dollar or our game plan or what levels to look for on the near term? Here's the 120. Here's what we looked like last night. Okay, no change to any of those levels. Again, near term, you're still looking to stay constructive basically. Above longer or broader term, you're looking to stay constructive above 112.85. Near term resistance, you're still looking at 114.39, the weekly range lows to offer support. D, yes, Bitcoin. I could definitely add that to the list. I actually sent an update to a buddy of mine who works in the hedge fund here in the city. They've been really actively, aggressively trading Bitcoin. So I've been sending him daily updates on that, but I'll be more than happy to share that with you, no problem. Bitcoin, 4D. Rising employment bolsters private consumption. Favorable financing conditions help investment. Stimulus pass-through supports domestic demand. And Draghi saying that survey results signal solid, broad-based growth. Global recovery supports trade, exports. More fluff. Okay, so we'll see if anything else materially comes out with regards to policy here. So far, it's pretty quiet. Okay. Euro dollar going once, going twice. To put things in perspective, the DXY looks like this. Okay, so here's the dollar index. We were waiting for 94.47 for a few months. It finally hit this week. That was the 786 retracement from the advance off of last year's low and basic slope support, former slope resistance. So really, really big level. You got that dip in price, just tagging it. I think then the low was 94.48 before turning. And here we are testing the bottom of the former support structure as resistance. So I still think dollar could get a little bit higher up into this zone before really testing any major resistance. The former swing lows from last month come in at 95.47. So that's kind of where I'm targeting daily resistance. But the basic range of focus for the index right now into the close of the week is here. If we were to topside break above 95.47, I would expect a larger recovery, possibly towards the monthly opening range highs, but that 618 has been a pretty major pivot in price. Okay, resistance, break, support, break, resistance. It converges on another slope line we've been following. So I'm kind of cautious here. And with what the euro is doing, I think we'll get a little bit more definitive price action once we clear today's event risk. Here's what the near-term chart looks like, just to put things in perspective. So that could be it. And this is what I was looking at before the webinar right now. It's kind of debating, on whether this could possibly get another stretch into that 95-35 target. That's just the weekly range highs. And that would be an actual touch of the median line. But it would make sense if this holds, guys. I mean, look at the slope that we've been following. This thing has been very, very clean. Again, we highlighted this setup earlier in the week here on the 18th, and this is the same slope. Okay, we came into it as support. We're rebounding now, testing the underbelly of that former slope support as resistance. Now we're posting an outside reversal candle here. Let me see what the 60-minute looks like. Even on the 60-minute, outside reversal candle. And euro with a nice rebound too. So if this does hold, if this slope does hold and we make it back below the range highs from earlier in the week, your key support, you still don't want to get too excited until we break or crack below that 94.47 target. So I'm still cautious on short dollar exposure past the lows here, just because of where we're coming off of. It's a pretty big level. All right, so a similar picture on both that euro dollar, obviously 60% comprised of this index for the dollar index. Watch both of these as we head into the US Open. Any questions on euro dollar or DXY, 1 and 2 for the day? Core inflation to rise gradually over the medium term. Inflation has yet to show convincing upward trend, says measures of underlying inflation remain low. Downside risk predominantly due to global factors. Momentum increases chances of stronger upswing. Risks to growth are broadly balanced. Euro area growth dampened by sluggish reform pace. We've heard that before. Rising employment bolsters private consumption. ECB measures support borrowing conditions significantly. Okay, the core inflation problem, that comment's pretty big. Core inflation to rise gradually over the medium term. Core inflation has yet to show convincing upward trend. As I said earlier, that's their only mandate. So as long as they see the upward trend, or as long as they're not convinced, you're going to expect that the ECB will continue to maintain this real lax policy. So interesting to see these comments. I'll continue to give you updates on that as they come by. Next up on tap is Euro Yen. Let's take a peek at what that's doing right now. Okay, so as we noted yesterday, if the break of this support structure is legit, prices should stay capped below the weekly opening range. That converges on former slope or former channel support, which should now offer resistance. That's right around 129.75. So on its face value, guys, the euro yen has simply made a weekly opening range very well defined below resistance. So you have to respect the break, period. If we break to the top side, look for that rally back towards key resistance, the 2016 open. Again, that converges on the upper slope here that we've been following. And that would be sort of the breakout zone for the next leg higher, targeting the 2016 highs. But if the break of this channel is legit, a downside break of the weekly opening range does look for that run towards the monthly open. That converges on slope support right down here. So you're basically looking at a range from like 128 into 127.50. So that's the focus for euro yen. I'm a little bit more impartial towards this one just because of the well-defined range that we're in. But also the yen factor here is going to be a big player. You have the BOJ on tap later tonight. So the ECB in the morning with the punch, and then you got the follow-up punch with the BOJ. Might be a decent play once we finally clear this range. Draghi urges other policy actors to contribute more decisively, says structural reforms must be stepped up substantially. ECB measures support borrowing conditions significantly. And again, I keep seeing this core inflation has yet to show a convincing upward trend. That's a headline a lot of these streams seem to be running with. Okay, so look for interim resistance on this rally here near 29.74. And again, if that breaks, I'm not going to really chase this, but just know that you still have to get through this major resistance just to put things in perspective. This is a big level. Former open, former swing lows, upper median line parallel, and now again, this is the monthly highs. So there's a lot up there. Any questions on euro yen? Again, no change to any of the levels that we highlighted earlier in the week from the 18th. We're just looking at a downside break of this, and we're basically straddling this right now. Here's again what the 120 looks like. So levels remain unchanged on that one. That is number 3. Any questions on euro yen? Draghi says headline inflation to be volatile in the coming months. Says inflation gains conditional on stimulus. Says the ECB needs to be persistent and patient. The ECB not there yet on inflation. Okay, so he's being pressed a little bit more on these inflation commentary. And, you know, if the inflationary concern is something that he continues to mimic near term, I would expect the market to actually press euro lower. It's going to mean that the maintaining of stimulus is going to have to last longer. That's diluting of the euro. Initial reaction might still be lower. But remember that the broader trend, you know, rarely changes on these events unless there's a material shift in the fundamental outlook. I don't think we're getting that here. Council was unanimous in not setting a date for change and for changing guidance. Council will take this decision in autumn. Okay. Okay, I'll continue bringing those highlights as they come through, guys. I just want to take a quick segue here and see what gold is doing. Might give us a tell as well. Okay, finding some support here in gold prices, as I thought we might. Okay, 1235. Okay, we'll come back to gold in just a moment. Let me finish up the euro crosses. The last one of the euro cross that I wanted to do from last night was euro Oz. And here's what that looks like. We came into a big support structure, and I just wanted to highlight that. We're getting the rebound now. You know, again, I'm not really too crazy on getting on the short side of Aussie, but certainly on the stretch that we've gotten, if I had to be, this is the rebound I'd want to be in. So the level that we wanted to highlight was 144.26 into 144.74. You're looking at a beautiful Fibonacci confluence, 100% extension off of the decline off the highs. So 2 equal legs down gave you 44.74. And then 44.27 is an exact 50% of the yearly range from last year, from this year, 2017 yearly range. So just below that, and the reason I was a little bit cautious about trying to get any type of bullish on this just yet is this region here. If you take the same slope we've been following off the highs, converges on the 200-day moving average, converges on broader median line off of this formation. And they all converge right there. So, you know, it's a little bit cautious. Again, just because you're coming into support doesn't mean you're necessarily going to get the rally. But certainly it was a zone that you'd start to look for some of that exhaustion. And heading into ECB, you know, this is one on a euro strength story, might be the player. So here's what it looks like on the intraday. Even within the confines of this decline, this near-term formation, here on the 120 minute. Here's the chart look like last night for Euro Oz. Even within the confines of the near-term decline here, you had this nice pitchfork off the highs, and the lower parallel also highlighted just below that key range. And an overnight trade, we almost got there. Okay, it was like 144, I think is what I wrote in the report, right? Yeah, the 144 handle. The stretch low was like 144.63. And again, working with a pair, obviously, Euro Oz with a much larger ATR, guys, so just keep that in mind. Long story short, you got the recovery back above 30, and here's the move Initial resistance that we highlighted at 145.37 has already been taken out. So I do think you make a run towards resistance a little bit higher from where we are right now. Okay, and that's basically this zone right here. So a decent rebound in Euro Oz, look for some near-term resistance. Bearish invalidation, we're going to keep that steady at this next target, 146.15 into 146.20, I think is what I noted last night. 140, yeah, so 140, this zone right here. This is where you want to start to look for some more resistance. Why? Again, very, very basic. Former slope support, basic trendline support, completely within the confines or completely within the probability here to see a break of support. Check as resistance. If this break is legit that we made, price should not surpass this region. A breakthrough there, you'd start to look for a rally all the way back up to the July open, possibly even the upper parallels, and that takes you towards 48.50 again. So next area of interest for resistance in Euro Oz. Questions on this pair? Draghi says tighter financing conditions, quote unquote, the last thing the ECB wants. And again, highlighted comments hitting multiple wires saying Draghi says council unanimous in not setting a date for QE change. He's in the Q&A session now, guys. So this is where we get a little bit more of the finer details. Let's go back to the euro dollar to track out what's happening there as we travel towards the highs. Again, 116.16. So remember the game plan here. It's either some sort of reaction exhaustion high there, or we were looking for a possible dip here to get long. So didn't get the opportunity to get on the long side. Let's see if we can get an exhaustion, but I wouldn't be doing anything from these levels, guys. You're basically looking for that press towards the 2016 high. Draghi says euro repricing has received, quote unquote, some attention. Draghi says finally experiencing, quote unquote, a robust recovery. ECB confidence. Inflation will gradually get there. Okay, very cautious tone. And I'm just reading through some more of these price wires here. Finally, okay. So we'll see what the Q&A session says, but keep your eye on that 2016 high. Fresh entry possibilities on Euro Oz. So to go back to Euro Oz, to finish that one up real quick, excuse me, this would be the first area, Karthik. The only issue I have with getting aggressive on trying to play another pullback here is this, Aussie, right? I think the Aussie pullback has a little bit more steam in it. As it stands right now, guys, just to put things in perspective, first of all, I don't have any major resistance here for Aussie dollar just yet, right? So, for as far as the swing trades are concerned, guys, we're still looking for a much, much higher rally. The immediate advance, though, looks like if we were to close at these levels right now, you're almost, you have an outside day reversal candle. So, if the Aussie the Aussie pullback persists back towards former resistance, now support, that could see Aussie tumble down a little bit lower from where we are. That's like down all the way down as low as 78.70. So what does that do to Euro Oz? Does that give Euro Oz, does it give us 146 or does it go, back to the median line on that? That's my only concern of trying to call a high on this rebound. Obviously, we've come off of a key support. Obviously, price now, if we surpass 46, would be an outside reversal candle off support. That's constructive. So Karthik, for the immediate advance right now, this is kind of something that's on the radar. I want to see if we get resistance here, the pullback, this would be the entry for the next long. If this holds, or you get US trade and you get that exhaustion high in euro, this actually might be a short scalp play just in this range. There's a lot of different ways you could play this. It's really determined on when you're looking to get into the market. The immediate risk is for the US market to open, this thing peaks out, and it pulls back towards 45.37 again. But this is like the focus range right now that you want to be sort of examining, especially if we break above 46, like I said, outside a reversal candle off the lows, off support nonetheless, and a major fib. Karthik, does that help? So again, here are the, he says, yep, here are the levels. Again, no change to any of the levels from last night. So we drilled down into here. We just missed 44, made it through 45.37. That should be near-term support now on the pullbacks. Watch for resistance right into this zone. Again, quick reminder, feel free to take a snapshot of any of the charts that you want or any of the charts that you see presented here, guys, for later in the session if you need it. Okay, Draghi says ECB did not discuss BOJ style policy for the euro area. It says ECB trusts strength, power of policy package. ECB ready to use flexibility of policy package. Okay, very interesting commentary here that he's not looking to use BOJ style policy growth. ECB to stay in the market for a really long time, quote unquote. Interesting. All right. Okay, so those are the euro crosses that we've been following, guys, or that we were tracking into the open. Euro dollar, euro yen, euro Aussie. Any question on any of those before we move on? I'll keep you updated as these continue to hit the wires here. Okay, next up on tap, a real quick update on British pound. Another one that a lot of people have been looking at. Again, from the swing side of things, we're still looking to stay constructive. Even on this trade, I'm looking for re-entry or entry from a scalping or intraday standpoint. This is the major support. Basic as you can get. Trend line support, median line support, slope support comes in at 129.20. That's a basic 38.2 of the advance. Nice pivot in price. As you can see back here, if you look to the mouse to the left, okay, support, resistance. All lines up right here. Looking for a hold in sterling while above this region. Okay, it dipped into oversold condition, which I didn't really want to see, to be quite frank with you. Excuse me on this drop off here, but nonetheless, we're still within the confines of the uptrend. I can't get bearish unless we push through 29.20. My bullish invalidation level, guys, that I had cited was the July low day close. That's 128.90. You might have seen that on daily FX earlier in the week. But this is really, terminal for me at this point. Here's what it looks like on the daily chart to put things in perspective. Before everyone starts screaming, shouting on the sterling. We're at uptrend resistance. I think we went over this multiple times this week. The median line of the basic uptrend that we've been following, a basic 38.2 retracement of the entire decline. Excuse me. This is off the high that we made. Geez, losing my voice by the end of the week. From Brexit, so the Brexit high, okay, you got a 38.2 retracement right there. So no surprise to see a little bit of a kickback. Look where slope support is. So you have this parallel, which is the 50 line. Low day close for the month, 128.90. So even if on a daily basis, we were to spike into that low, as long as the close holds above this, it's, objectively a level I'd like to see hold. Now ahead of that, you have the monthly open, which is something that we just broke through, which is why it's a little concerning. But for me, this is sort of the basic focus range right now, is 130 into 128.90. Initial support, looking at this on the intraday basis, is going to be right here at 129.20. Keep in mind, we are getting some divergence on those highs. So yeah, the momentum signature does show the risk that we're going to see some sort of turnover in price, but we've already seen 4 days of consecutive decline. So that could be the extent of it. I don't know. All I know is that from a price standpoint, while above that 28.90 level, I do want to maintain a broader constructive approach here on sterling. What would need to shift our focus to the upside? Obviously, key resistance still remains 131.20. That hasn't changed. Okay, even in time, it more or less lines up with that slope still. But on the near-term approach, a 130.50 break would be pretty nice. It's the initial weekly opening range lows. It would necessitate a break above this sliding parallel in red, which has been a very nice pivot in price. Resistance, 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 break. Break again, instant resistance, 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 support, support. That converges on the weekly opening range lows right around 130.50, 130.48. So this is going to be your near-term sort of bearish invalidation level to shift the focus back towards that key resistance. Any questions here on the British pound? Just want to see what this looks like. Okay. Look for support ahead of 129.20. Break above 130.50 to really let this thing go. Okay, that is number 5. Okay, other highlighted commentary here. The markets are really running with this whole tighter financing conditions are the last thing, quote unquote, the ECB wants. ECB did not discuss BOJ style policy. ECB to stay in the market for a really long time. Flexibility with policy, already said that. Tapering scenarios are not being discussed. Okay, so the whole thing that we were talking about, guys, earlier, what I wrote about last night, what we talked about in the webinar earlier in the week about the focus being on the taper or any changes to the asset purchase program, which currently stands at $60 billion per month. No discussions. He just said it flat out right now. And that was the real big variable for today. Tapering scenarios are not being discussed, says Draghi. So pretty much status quo. No further clarity on where the committee stands or the timing of when they'll start to taper that 60 billion monthly asset purchase program. So that may be all she wrote. No, Draghi sees no sign of inflation picking up in Europe. Okay, that can't be. It's an interesting headline there. I want to see where that's from. But we'll come back to that. So I'm not expecting to see, the euro really knee-jerk too much stronger from here, guys. Just watch the U.S. Open. But that was pretty much the extent of it. That was one of the major things that we were looking for, is what the taper would look like, both the amount and timing. But he says that discussions or the scenarios are not even being discussed. So I don't think the markets are really going to take a cue off that. Moving right along, Kiwi dollar. Here's what Kiwi looks like, or excuse me, Kiwi yen. Also, we did an update on this one last night. And for this trade, the only thing I wanted to highlight is the intraday chart hasn't really changed from late last week even. So the weekly opening range is taking shape just below 82.86, which was a target that we were looking at. And again, by my estimations, again, the level that we reached at on the daily chart, I'll show you in a moment, has us at a risk for a pullback. And that risk still would materialize if we make it back below 82. So I just want to highlight this key range. Keep an eye on it. The BOJ is on tap, so you could get that yen strength, which would suddenly give us a downside break. In any event, your targets should be limited into that 100% extension. That's 81.10. 81.17, 81.16, and that converges on the lower slope here. Oh, my circles are disappearing, but that's that. So you can envision a scenario, again, very basic setup here, guys. Basic trendline support off the lows, You've been working with this slope, very nice pivot, resistance, resistance break, support, really nice support earlier in the week. If you were to see a downside break, again, you have open range down to 81.16. You'd have to reassess the decline at that point, but it'd be 2 equal legs off that high. At the end of the day, if we make it back above near-term resistance, this pivot zone that we were looking at last week at 82.80, you still have those resistance targets to the upside. High day close, 83.56. 2016 high, 83.73, just near-term targets on a topside break above this region. So the levels are pretty clear. You have a very, very clear range that you're looking for price to finally get out of. And you have the BOJ on tap tonight. Neutral in this range right now with the risk lower below 82.80. That is number 6. The cleaner of the two, oddly enough, I'm going to wash my hands after I say this, but is the dollar yen. Dollar yen's looking good. So, here's what the dollar yen looks like on a relative basis. The advance looks like this. ECB, Draghi says sound implementation of Greek program essential. ECB to stay in the markets for a really long time, says Eurozone still needs further stimulus. No date for stimulus changes. Okay. Give me one moment, guys. Still going through some of the commentary here. Q&A still going on. Okay. Interesting. Note, ECB chief says patience needed with stimulus. Okay. No signs of inflation picking up in the year. That's the second time I've seen that one. All right. So Mark says the BOJ was last night. Yes, the BOJ was last night. Do I keep saying the BOJ is on tap tonight? Yeah. So this is basically what the aftermath, I guess, would be. The advance off of key support. So remember earlier in the week, here's what we look like on dollar yen. Dollar yen was published on this day. So the basic focus on this one was this 111.50 barrier. We got right into the bottom end of it. I think I might have tried this a little bit too early. Here's what the level looked like. It was a 111.57 to 111.79, right? The 200-day moving average, 100-day moving average, 50% retracement, and you had slope support there. Here's what it looked like on the daily chart. So we probed right into the bottom end of that. I think the low came in at 111.55. So we're literally just into the bottom end of that zone. We needed the break above the weekly open to really get some sort of upslope on this basic channel resistance clearance to get the to rebound. Now we've made it through, but we've pulled back, and you'd need to see support basically ahead of that former trend line or channel resistance. So I'm looking for support again on this pullback to validate the breakout. That would give you somewhere just under 112 to see if you can get an entry with a stop against the lows from Asia yesterday. That's how I would look to play this on the 60-minute here. We still need to clear the weekly opening range to validate the reversal off support, but this is a big zone near term, big zone. On all different types of scales. Keep in mind also it was the June opening range high, which once cleared gave us that June stretch high towards the end of the month. Again, the 100 and 200-day moving averages. On the near term, the 50. And you had some decent divergence in price action as price action continued to press into a new low, oscillator, making a series of higher lows. So I do like dollar yen finally seeing a little bit more of a support bounce here. The BOJ is still going to be the player. I mean, we got that release, Mark, but there's not really much follow through on the yen crosses. So I really want to see how the U.S. Open basically reacts to the BOJ. If we get the pop through the weekly open, in my mind, that would validate the reversal here. But as far as price action is concerned right now on this pullback, look for support along that former channel resistance. So levels are unchanged here. Let me just adjust these for you. That's key resistance. And again, here's what we looked like earlier in the week. Excuse me. Any questions on dollar yen? Okay, I don't really have much to say on Aussie Kiwi. I do want to just give you a quick update on what that's doing right now. So early in the week, 107.71, if you guys recall, it's still a bullish trade. We were talking about this for the last couple of weeks. And at that point, when we were looking at this earlier in the week, I just didn't want any long exposure into this region. It's a pretty big resistance zone. It's a key 618 longer term retracement. Yeah, trend line resistance up there. And this is why, you get that quick fade up into 108.50, and that was the reversal. We're right back at the 107.70 range. So, it's still a key zone, guys. We've just, we're straddling it to the upside. We've straddled it to the downside, but price continues to rubber band around this. Here's what it looks like on the daily chart and why I'm a little bit more concerned of the type of reversal play that we're seeing. We're already, 70 pips off the high here in Aussie Key. It's not that big of an ATR player. Momentum, if we were to close below 70 on a daily close basis, would also suggest, the risk for near-term exhaustion here. So just want to highlight this again. I'm not in it. If anything, I'd be interested in fading strength for a move back towards former median line resistance, just as a near-term correction play. But ultimately, I do still think this is a very constructive trade. Remember, we've made it through again a major longer-term slope of influence on Aussie Kiwi that we've been following for years. We made the pivot back above it. So objectively, we're still constructive, above 106.60. Near term, I do think you risk the correction lower towards former median line resistance. Basically the 107 handle or just above. So sort of the game plan here, and would coincide with a near-term pullback in Aussie. Also getting that divergence here in price. Okay. Any questions on Aussie Kiwi? Very similar scenario. I should have probably done this after the dollar yen, but Aussie yen, a little trickier right now because Aussie's pulling back and dollar yen rallying obviously is yen weakness. So that's both of these currencies kind of on the tail end. But I just wanted to highlight that key resistance we talked about earlier in the week, 89.16, the July low, which converges on all of these levels, is still sort of the level to beat. We haven't cleared that for sure yet. Here's Aussie yen from earlier this week. Okay, there's that level. So, excuse me, it's right up here. 89.16, the July 2015 low. The upper parallel converges on channel resistance. All lines up still here. So you can see we've tried to get through it a couple different times. Momentum is obviously diverging with price. Again, this doesn't tell us necessarily when it's going to turn, but it certainly highlights the risk for the near-term advance. And if we do see yen strength, on the back of the BOJ here heading into the US Open, once we get the reaction, this is still the level to beat. If we topside break, remember, the breach of an ascending formation will oftentimes be the sharpest part of the rally. So if we clear 89.16, I'd expect to see this thing like shoot towards 90. Don't even think you'll get a chance to get in, to be quite honest, if we clear this upside target. Ultimately, you're looking for the pullback to get long, or sort of an exhaustion high here to try to play the pullback. If you try to get on the short side of this, guys, be super nimble, really small leverage. Your stop should be just against the highs here, because I don't want to necessarily fight this trend yet. You don't have enough conviction to do so, but certainly the risk does remain while below 89.16 for a near-term corrective pullback. Ultimately, you do want to buy it. Okay, this is a broadly constructive trade, and my trade of the year actually for the yearly article I write for Daily FX. Questions on Aussie yen? Okay, holding near-term resistance 89.16. Risk for a near-term pullback on that one. That's number 9. Okay, next up and last up from my end is gold, and then I'll jump into your questions. D wanted to take a look at Bitcoin. We'll take a look at that. But first, here's what gold looks like. So, Karthik, we'll take a look at crude too. No problem. Let me just jot that down. Yeah, it's getting a little attention these days, right? Here's what gold prices look like. So the major, let me take a step back. 1241, 1240. If you guys remember, that was the level we talked about ever since we made that major key support bounce off of 1204, 1209, which was a key support that we were looking at. That's the low day close that we made here in March, the 50% retracement of the advance off last year's low, and you had slope support all in that zone. Really nice reversal off that. Even near-term price action gave us some nice play. The upside, we were looking for resistance to essentially hold more so near 1240, which is basically former slope support. You see this? Boom, boom, boom. That was right there, just higher. And what we highlighted on the onset of the week is this. And a little bit more or a little bit less of an area of interest now, guys, because of where we are in time. We're pushing through, and the slope actually brings that down a little bit. But this is pretty big. You got the 1618 extension from the advance off the lows. You got the 50% retracement of the decline off the highs. You have the upper median line parallel for the formation that we've been following, which has obviously been, the slope has been very decent. Resistance, the break saw acceleration. All of that converges down here to show us support near 1230 and still highlight resistance. I left the level as is. It's really just ahead of 1250, guys, but it's this zone right here is what I'd be cautious on. Actually, if you take this to the highs, converges on that same spot. So I'm sort of debating the way you want to look at this, or from a trading standpoint, I guess how I would attack it is you'd be at risk for a near-term exhaustion on one last play from here to move lower. The same point, this is your bearish invalidation level. If we were to break, it would definitely change the broader picture for gold on the medium term and shift it to the upside. Such a scenario, you're basically looking for a rally into this. And remember, this is the 2011 slope resistance off the record highs. We made so many attempts to break above this. And we had a huge false break earlier this year. So if we were to clear this level, it would change the whole picture for gold. Remember, always, I've showed you this chart a million times, but the weekly chart on gold is really the most telling. Just to show you the significance of the area that we're approaching. There's that key record high 2011 trend line right here. So if we were to break above this, it would put this formation back into focus, right? And that gives us a lot of room to the upside. Questions on gold's current pricing? Still could see a stretch up into 1248. That's, I think, where you need to really focus on key support, near term, or key resistance rather. Initial resistance right now is 1234. We've tried to stretch into that for the last couple of days. Bullish invalidation for the current advance is down here at 1230. This break is what would put us back on resumption. But right now the focus is on whether we get into that stretch at 1248, 1250 or not. Looking for fresh entries, Karthik. Yeah, so those are the levels I'd be looking at in gold. It's pretty well defined. Like I said, from a trading standpoint, it's either a fade, a rally into this 1248 level, or if you get the pullback, I really want to see what the reaction is down here. Remember, this is not only just highlighted Fibonacci and slope support, it's also, Karthik, the objective weekly opening range lows. So any way you slice it, you know where major support is, at least on the near-term approach here for gold. Okay, last but not least, gold is number 10. Let's do number 11. D, here's what I'm looking at with Bitcoin. This is the chart that I sent him this morning. And it looks like we just broke through. So I was highlighting July open resistance. Monthly open resistance came in at 2465. We just broke through that. So here's the upper parallel, okay, of the operative slope that we've been following just off the highs. If we were to clear this zone now, it's right back on the constructive play. Would be, let's put things in perspective. Let me say this. D, we just cleared with this rally off the low from the beginning of the week. We just cleared the entire monthly range if we were to rally through 2643 here, the monthly opening range highs. That's pretty big. That's pretty constructive. Now this is a very speculative trade, guys, and obviously dollar weakness, has definitely been helpful in really fueling this major advance off the 50% retrace. I mean, that was a very, very sharp and decisive move since the start of the week. This thing's just been ripping face. And obviously, now you're coming right back. You've made it through the monthly open. I'd be looking for near-term resistance. Here's what the intraday chart looks like. Watch this. One, two, three, four, five. Look for maybe some near-term correction off this. Wave count looks pretty decent. Yeah, but you're an overbought. You definitely don't want to start, trying to fade it per se, but I'd be looking for that 70 downside break early in U.S. trade. See if you can get some exhaustion. Yeah, it looks like it's gonna scream exhaustion a little later. D, does that help? So again, there's the 240-minute chart, I guess, if you want to take that for your reference. The only other thing I'd add to this is just the retracement off the high. Already cleared. Well, look at that. 618. Stop traffic. Right on. Boom. Yeah, pretty big level. It says yes, thank. The moves are so huge, though. And that's the one thing I just want to caution you guys. If you are trading Bitcoin, look, there's plenty of opportunity there. Jamie, I know he's made a killing on this over the years. It's it's extremely volatile, 100%. And I just want to caution everyone, if you are going to get involved, just know what you're getting involved with. But the range is there on an intraday basis. Definitely on a longer term basis, this thing sees some massive swings. But we'll try to keep you attuned for sure of what's going on. Yeah, the interest is building. So I'd be looking for near-term resistance right around here. The other one that seems to be gathering also some attention, Ethereum. Here's what the Ethereum chart looks like near term. This is a little different in that it looks like it's broken near-term downtrend resistance and checked it as support. So if that is the case, the the emphasis really has to be on a break above 1241, in my humble opinion, to get the continuation higher here in Ethereum. This is also a trade that has been a little tricky in that I don't really like where it bottomed, but the momentum signature really validated it. We made a break with the weekly opening range, which validated it. And if this formation is in play, which it looks like the median line caught perfect support on this pullback, then this really is the major level that you need to clear to get the upside break, next leg higher here in Ethereum prices. All right, any questions on that, or any of the cryptos for that matter? We'll continue to follow these as the interest builds. As far as crude prices are concerned, that was 11, 12 was Ethereum. Who was it that wanted crude prices? Was that Karthik or you, Mark? Looking for Karthik, that was you, right? Here's crude, man. This will be number 13. Crude prices look like this. Right. So I don't want to do anything with this. I think we talked about this earlier. If you're long, you don't want to get out until, let me take a step back. If you're long, your targets should be somewhere just ahead of 48.17. That's a really nice level. It's the 618 retracement of the entire decline off the highs that we made for May. More importantly, the upper median line parallel of this formation, which hasn't been the cleanest per se, but there's so much lined up there. You also have the 100-day moving average, the 618, as I mentioned, and the upper parallels. That's a three-way confluence, just higher from where we are right now. Really nice pivot in price too. Support, break, saw acceleration, resistance, support, 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 break, resistance, resistance, converges right there. So I'd stay constructive near term. In-term support at 47, 46.88, this zone here that we were eyeing as the opening range high for the week. We'd say bullish invalidation is down, down here. This is the break that would turn your bias, near-term resistance, or the targets on the long side, still a little bit higher into 48. Finally getting some clarity on this, guys. I know it's not the cleanest chart. I know there's a lot of lines on it, but from a level standpoint, if you look at how price action has been reacting, it's actually been pretty clean. It's actually been pretty clean. Questions on crude prices? Number 13 for the session. All right, and with that, brings us right into the close. Again, thank everyone who attended today's webinar. Again, a quick reminder, I do want to apologize. I missed yesterday's webinar, guys. Some urgency on my end I could not get out of. And also keep a quick reminder that Jamie will be on tap at 11 o'clock. So just in about an hour and a half here, you'll get the pleasure of hearing him go through some of the midweek setups and some of the broader setups that we've been tracking over on the swing trades. Look, at the end of the day, Draghi hasn't really changed or altered the expectation for the tapering of QE asset purchases. And that's what the focus was. Whether he was going to shift his tone or not, because you have the Fed and you have all of these central banks that are beginning to normalize policy. Meanwhile, they're still, on the tail end of that. So we didn't get that. If anything, we got a cautionary tone, we got a determined tone, a little bit more upbeat on growth, while noting that the ECB stands prepped and ready to go. There's no change in policy here, guys. So look to price action to really drive this heading into the U.S. Open. On the yen crosses, I do want to see the BOJ response as U.S. markets come online and U.S. traders open up. So keep an eye on some of those yen crosses, specifically on that dollar yen. We're looking to see if we can validate the break of this near-term descending channel. Like I said, we'd look for support just ahead of that former channel resistance to see if that actually is going to legitimize or gives a little bit more validation of the break. Best of luck trading, guys. I will see you all next week. Have a great weekend. Cheers.